Welcome to the podcast that accompanies the DOT analysis platform, where we discuss real-time trends in the truck insurance market and explore answers to the questions you're not allowed to ask. I'm Ray.
And I'm Ben. And this is the Inside Lane.
I finally learned, stumbled across a video put out as a marketing piece from the FMCSA. I finally learned what MOTUS means, because I have really been wondering for several months now what MOTUS means. The new system from the FMCSA. Do you know what it means?
Yeah, you've been wondering?
I have been wondering because it's like MOTUS is like a motor, US is like United States. I was like, oh, this is cool. It's got to be a cool acronym, right?
Well, I thought you knew the whole story, though. You haven't heard the story?
I have not heard the story. Tell me the story.
Well, I got a hold of the meeting notes from the meeting recently they had. I thought we talked about this.
Well, enlighten me and our audience.
So supposedly the FMCSA there was a bunch of issues they were dealing with. They hired a consultant PR firm to come in and help straighten them out. And the way the story goes, at least what I was told, PR firm comes in, they say, hey, we've got this major problem. Meeting of the entire FMCSA. So we have a major problem. Citizens are concerned about safety with these 80,000-pound missiles flying down the highway.
Oh, yeah.
Consultant holds up a hand, says, let me stop you right there. First of all, don't refer to them as citizens. They're the motoring public.
Yeah.
Okay, they say skeptically. He continues, and they're not 80,000-pound missiles. They're motor carriers. Sir, they responded, they don't even carry motors. Details, he says, never let those get in the way of branding. Everyone in the room cautiously nods and starts jotting down notes. So what do we tell the motoring public then, they say. Tell them less, he says. Less? But they're concerned for their safety, sir. Exactly, he says. They'll feel safer if they don't know how afraid they should be. The room starts to fill with excited energy. Brilliant, they say. While you're here, we've got another issue. We spent years developing a safety scoring algorithm so complicated that it rivals Einstein's theory of general relativity. No problem, he says. Well, what do we call it, they ask. Call it basic scores, he says. But they're anything but basic. Exactly, he says. Expectations are everything. Everyone in the room is furiously scribbling notes by now. All right, last question, the director says. We're launching a new online system. It's going to confuse everyone, delay filings, crash at the worst possible times, and probably keep half the trucking industry on hold for 6 months. We need a name that inspires confidence. He smiles and says, everything grinding to a halt? Sounds like movement to me. But don't you think that's a little too on the nose, the director asks? What if people see through it and we look like fools? You're right, he admits. Why don't you use the Latin equivalent instead and call it MOTUS? The room erupts in applause.
Well, I will admit that the video I found from the FMCSA on YouTube didn't quite have that story baked in.
Wait, it didn't sound quite like that?
It didn't sound quite like that. But
did they hide some of the details?
They must have hidden some of the details. But we will put in the show notes for this episode, we should link to that video from FMCSA, because that is the funny thing. It is the Latin, say that again. It's like the Latin term for...
Yeah, let me get the actual definition up here. It is the Latin word for movement. I think they say movement or progress, which is kind of interesting because...
That's great.
Well,
MOTUS
hold on.
Sounds like motor, and it sounds like US, and it's us. So, yeah.
Okay. All right. I've got the definition. Okay. In Latin, it means movement, motion, or gesture which can also mean emotion or passion and refer to physical or political disturbance such as a riot, revolt, or commotion.
All right.
So they
Well,
definitely focus heavily on the movement aspect of the word.
well, they also achieved the second half of that definition with, breathtaking perfection.
Yes, they did.
That's fantastic.
Yeah, so I think we're going to do a deep dive coming up soon here on one of our episodes and actually unpack more specifics around the MOTUS changes. But I mean, some of the key things, because it's been a huge topic of conversation.
Yeah.
Not just amongst our clients, but the industry as a whole, obviously. I mean, we've seen, just to highlight a few of the key things people have been talking about, authority types changing. That's massive.
Yeah, that's a big thing. There's so many implications for that, not just in, oh my word, I can't wait till we get into the deep dive of that because there's so many implications. That's, lest I use the word fun, I think it's fun. It's cool.
Yeah, you do overuse that word.
Yeah.
But filing issues and new authority specifically, oh my gosh, what a mess.
I know. I do feel bad for a lot of motor carriers who have been, suffered from that. That is so frustrating. But yeah,
for sure.
More to come on that.
Issues logging in, claiming your DOT number.
Yeah.
DOT status is messed up. And then just in general, the structure of data is totally different, which depending on how you're using it may or may not be a front of mind thing, but definitely affects the way this data is flowing through the industry and the various platforms that use it. So very interesting topics to get into here on a soon to come episode.
Yep. Absolutely. For sure. That'll be cool. Get into all the minutia of that. Hear some people's feedback and some like real world stuff.
Yeah. So in the meantime, let us know if you've got specific questions or comments related to MOTUS, and we'll make sure to cover that in the next episode.
Yeah, that'll be fun. Yeah, we will, for those of you who've already asked, a million different questions or thoughts, we'll weave some of those in there. So can't promise we'll get to all of them. There's probably too many, but some of the most hard-hitting ones, kind of wrap those into some of the feedback we've gotten from clients.
Yes. Absolutely. All right. Should we jump into risk retention groups today?
Yeah, that sounds good. You want me to pull anything up in market intelligence or?
Well, why don't we let's just talk about what they are. I think some people obviously are very familiar with them. Others may not know a whole lot at all. It's kind of a weird category, to be honest.
Right. Yeah, it definitely is. It's not, well, I don't know if I'd call it weird. It's just not the same as all the big markets. It's a different animal in and of itself, right?
Yeah. So I looked it up to see. I wanted to know, like, what's the origin of these? What is the actual framework around them that's different? So they're actually covered by a law that's called the Liability Risk Retention Act of 1986. Interestingly enough.
Yeah. So they've been around. It's not like it's a brand new thing.
No, not at all. Not a new thing. That law allows businesses with similar operations to self-insure their liability risks by forming a member-owned insurance company, which can then operate nationwide under a single state charter. So that's a pretty unique difference from a traditional insurance company, which is going to independently file in every state, creates a lot of differences, pricing differences, paperwork differences across or within different states. And this charter allows them to basically cut through some of that and kind of offer a much easier access into various states.
But it's got, as I understand it, and it's kind of fun to follow these different threads in the market because I'm, even being in the industry for almost 2 decades, I'm constantly learning stuff. And as I understand this, with risk retention groups, part of being a risk retention group is that there's also drawbacks. It's not just, cleared a bunch of paperwork and now you don't have to get filed in every state and yada, yada. There's reasons why motor carriers avoid them sometimes. And there's reasons why people don't want to be in one. There's reasons why some people do want to be in one. So it's interesting to unpack.
Yeah, for sure. So why don't we just, let's go through a few of the, pros and cons of RRGs, risk retention groups, compared to more traditional insurance companies. So I've got a few things here. A traditional insurance company, what do you get with that? Well, many traditional insurance companies actually have a rating, and
AM
that can
Best
be pretty
rating, yeah.
significant.
Oh,
Yeah,
yeah.
or various others, but yeah. And so depending on the
Yep.
type of loads you're hauling, the customers you're working for, that can be really significant.
I was
And
working with a one of our clients. This is just a couple weeks ago, and they had placed business with for the motor carrier, their pretty large fleet. They had a line of coverage that they had placed with a non-AM Best rated market, and I was talking to him, and he was telling me he was kind of all jittery because he wasn't sure if everyone's going to accept his COI because you know, it's not an AM Best rated paper name. And he breathed a sigh of relief, a couple days into the policy. He's like, okay, everyone's accepting it. It's great. But it was a big thing because in the past he's had it where, it's a non-starter for some shippers. They won't accept it. So yeah, I totally experienced that. Totally experienced that.
so definitely something to be aware of before just getting put into an RRG without really
Yeah.
considering that.
Right.
Uh, Another interesting thing is many of the RRGs that I've looked at have what they call fully earned premiums, a term that some people might be familiar with, but oftentimes means that you are not uh, going to get a prorated premium back if you do cancel midterm, and that can be a surprising thing if you weren't expecting that getting into an RRG.
Yeah, that's so fascinating because that makes me think, does that mean they're all full pay policies? Like, because that'd be a crazy amount of money. So
I'm
I don't know.
sure there's
There
variation
there
across the
seems
various.
like there's got to be some unpacking of that understanding. I don't know if I have my whole understanding wrapped around that. If anybody in the audience can, has some insight into that, I might ask a couple clients who I know use these, see if we can figure out the answer to that. That'd be
Yeah, but
interesting to know.
certainly something to keep an eye out for at least.
Right. Yeah.
Um, all right, so they're easier to get into in the sense that they have a pretty common offering. There's not going to be as much state to state variation in their offering. They also tend to be very specialized,
Yeah.
which means that
Like with
if
their
you,
operation type, like the kind of
yeah,
motor
it does
carriers
seem
that
like
they're,
that.
yeah.
Often specialized geographically. Most of these risk retention groups you'll see are centered around a state or a couple of states, so they seem to be geographically specific in many cases.
Is that because of the footprint of their distribution though? I wonder.
I don't actually know for sure.
Yeah.
So we're doing an early episode on this where we're just exploring some of the stuff that we've seen within our platform, and we're going to get into that in a second here. We'll get into our DOT analysis platform and see what a few of these look like. Maybe this is a little premature. Maybe there's more market data out there that we should know or could know, but at least want to start the conversation, bring some awareness to what we can see. I definitely don't have all the answers on these things.
Yeah.
So lots of detail that could still be filled in for sure.
Yeah. It's fun
But
being able to see it all though in the market, because this is just one aspect of the market. And the crazy thing about, having a 10,000 foot view of the market where you can zero in on something is
yeah, for
you
sure.
get access to see all this. It's super fun.
Yeah. So to summarize a little bit of this, then they certainly have some pros and cons. It doesn't mean that they're automatically bad. They definitely have some risks to be aware of. The rating or lack thereof in many cases, the fully earned premium, the fact that they're not necessarily as sophisticated of an insurance company. In fact, a lot of these have outsourced their underwriting because these risk retention groups pop up. They decide, hey, we want to take some trucking risk. We want to collect that
There's big
tantalizing
premium
premium that's
dollars.
out there.
Oh
Yeah.
yeah. Yeah. People get tempted by that.
But they don't necessarily know the industry well. A lot of times they have outsourced the majority of or all of the underwriting to various MGAs. Also, not necessarily a bad thing, but it just is different and something to be cautionary about as you're getting into it. You're not necessarily getting into a trucking specific, know the industry well organization, which can obviously have a whole set of challenges with it.
Yeah.
But that being said, they oftentimes will accept risks that other insurance companies might not be interested in.
Yeah.
So they might give you the ability to pick up insurance when you're having trouble getting it through traditional insurance company. And if you're in one of their specialized markets, they could have an offering that's great for you, and doesn't mean you shouldn't consider it. So
Yeah.
as we like to say here, we're not saying anything is specifically good or bad. We just want to provide information on how to understand different parts of the market, and then you're going to identify the use cases where it's appropriate and how to leverage it. One of the really interesting things that a lot of our clients are doing is just looking at these as opportunities, because they have such interesting collections of policies there. And
Yeah.
because of some of the nuances of these risk retention groups, sometimes there's really juicy opportunities for prospecting that exists there.
Yeah. Yeah. That is very true. Man, some of the stories that come to mind of just thinking of, people lump their assumptions in of they look at, a book of business that's got, a lot of red in it. And they're like, oh, I want to avoid everything there. Well, there's some diamonds in there, and if you have the right tools to find them and to mine those out, man, there's some cool opportunity. What's better than opportunity, you know?
Yeah. So do you want to pull up a risk retention group? We'll take a look and
Yeah, sure.
see what's
Let's do
going
that.
on.
All right, here we go. So I am pulling up here. DOT analysis, market intelligence dashboard. I got the whole market pulled up. Yeah. Tell me where to go. What do you want me to, what should we
Well, we
look
were
at
looking at
first?
A1 the other day. You want to take a look at A1?
Yeah, we can do that. A1. All right, they got a couple papers. A couple paper names, I should say. We'll just grab the logical insurer. A1 Commercial Insurance RRG, or Risk Retention Group. And that is one interesting thing. I see it in the name all over the place on these different books of business where it'll say, something and then RRG or something Risk Retention Group. I mean, it's in the
Yeah.
name of their paper and the logical insurer name.
Yeah. It does seem like, I don't know if that's actually a requirement, like a legal requirement.
Yeah, I
I
wonder.
feel, I think that there are a few papers out there that maybe have specialty in the name, and some of those appear very much like an RRG, whether they officially are or not. And so I wonder if,
If it's a
but,
requirement or not to have that in the name, that is a good question. I don't know the
but
answer to that, but that would be cool to find out.
But we've been looking through the platform. There literally are dozens, if not hundreds, of these RRGs out there, and many of them do have
Right.
that in the name. So that does seem to be a very common theme, which
Yeah.
is helpful if you're looking for them.
Yeah, that's true. It is helpful if you're looking for them. So here's something to point out. Stop me if I'm getting ahead of myself here, but here's what I always see. Not always, but a lot of times. Here's what I see oftentimes when I pull up a risk retention group and their book of business in market intelligence is I will look at their current renewal rate and I will see that it is just usually, man, it is way below the market average. So it always just seems like an abysmal ability to renew business. So that's one thing that kind of, if it didn't have RRG in the title, it would kind of give it away to me because they just seem really like they struggle to retain business. So there's opportunity in there for one thing. The second thing I always notice is that on the relationship duration, you can see that even if they have whatever their number of clients is, they just have most of those relationships are super early, young relationships. Because again, it's just reflecting the fact that they can't hold on to business. In this case, look at that 86% of their book of business is in the first year. So it's like they get new business and then it goes out the door,
All right. So I want to point something else out, because just looking at this snapshot, you could be tempted to think, well, maybe this is just a brand new player in the market. So you can use our time filter, though. So let's go back to that year ago and see what they looked like a year ago, because they got 800 policies
that's
right
a good
now.
idea. Yeah, 887 policies right now. So let's go back a year ago and let's just see what it looks like. So yeah, a year ago, 788. So around the same amount, they had.
Yep. And still
Yeah.
84% new business.
Yeah. So that's so fascinating.
So
they
back that
had,
up 2 years and see what happened here. Let's just trace this back a couple of time periods.
all right, we'll trace it back. Yeah. All right. So we were at 800, at, a little under 800 2 years ago. Now we're at, 669. So, hey, they are growing. And look at that. it's all, oh, I shouldn't say the word all. I can't use the absolute there, but so much of it is just new business. It's just like this treadmill of churn. Oh, that would be so painful if you're putting something in that market. You just know
Yeah.
it's going to pop right out of there the next year.
But what
That's
a fascinating
difficult.
insight though, right? Because what we're seeing here is every year they just pump a ton of new business in and then it all just drops out the bottom. They're like operating a sieve.
Oh, yeah, that would be really, I mean, don't get me wrong, there are use cases for that. One of the things that I
No
talk about
doubt.
sometimes with clients is, you'll have a recovery market is some of the times the way it's termed, where, hey, you got a motor carrier, they're working on their scores, they're working on some operational issues, they got some drivers they got to straighten out, whatever it is. They need to go into a market where they can still have insurance. We don't want to shut down, right? But they're there because they need to recover and they need to improve some operational and safety things, knowing they want to get to a better insurer down the road.
Yeah. Now, we did look at several of these before the show, and some of them are pretty sketchy, but scroll down to the safety on this one, and we notice like A1, they're not churning because they've got all bad in their book. Look at that. Their book, now this is 2 years ago, it was 17% red.
Okay, let me go back to now. Let's go back to now because I'm
Yeah.
still in the 2 year ago filter. Oh, yeah, look at that.
Their red ISS is a lower percentage than it was 2 years ago.
So they're actually doing better quality underwriting.
And yet they're still just churning business.
Yeah.
So this would be a fascinating book to go unpack, go over to Market Explorer, dig through and find out like what most of this business is moving. Is there
yeah.
any business in there that's
Well,
interesting?
let me just point this out for our, if you're on, Apple Podcasts or Spotify and you're not actually looking at the video recording of this, Ben said that they had 13% red ISS, but let me just point out they have 5% yellow optional. And here it is. 37% of their book is green ISS. That means it's been assessed. It's got an ISS score. It's not in the unscorable formula. It's actually green. So there's some there's some decent stuff in there. Fascinating.
Yeah. So once again, for the people only listening, that doesn't add up to 100%. So 44% of their book is the non-scored. There's not enough
Right.
data to have an ISS score.
Because they got a lot of small single unit guys in there, correct?
Right. But that's an important clarification that green means that there actually are, at least presumably, reasonable and safe motor carriers in there.
Yeah, absolutely. That's super cool.
Yeah. So really fascinating. So where do you want to go from here? I mean, we don't have time to go through a whole list. There's a bunch of these that exist, though. Maybe we talk about that a little bit. Let's talk about some of the other ones that we can see and just give an idea of how big this market really is and how much opportunity is here.
Right.
So one place we noticed this, I did the market update video that goes out to all of our clients every week, and we looked at Progressive's book last week. If we go to Progressive, this is what's really interesting. Go to where Progressive
up
yeah,
here?
sure, pull them up.
All right, let me just clear that out. We'll put in Progressive. All right, there we go. We're looking at Progressive now. All the writing papers across the whole nation.
Yeah, so let's go down to the lost business area of Progressive's book. So obviously the key players are at the top, but if you start scrolling through this list, just and slow down a little bit, as we scroll slowly through the list here, once we get past some of the biggest main players in the market, notice how many of these risk retention groups are going to start to appear. And we'll just read off a few of them as we see them.
Yeah. Motor Transport Mutual Risk Retention Group. Interesting. OIDA Risk Retention Group. Southwind Risk Retention Group. Professional Transportation Risk Retention Group. National Transportation Insurance Company Risk Retention Group. Yeah, there's a lot
literally dozens in this list. So even if you don't know where they exist, it's interesting to see some of these big players in the market who are losing some of their business to these. You can go and find this whole list. We could unpack each one of those that are in this list and discover areas of the market areas of the country where they exist, key markets they're writing in. Another one, why don't you just throw in our, go back to the menu there, throw in American Forest Casualty, RRG. Here's just a American Forest Casualty. Yeah.
Oh, yeah, there we go. American Forest Casualty Company, RRG. Look at that. Oh, they're just interesting. They're in the Northwest. Looks like They're in Washington, Oregon, Idaho, and Montana.
Yeah, so
What a
check out Cargo, Ray.
oh, cargo! Look, they do all the log and pole and lumber. Oh,
Yeah.
that's so fascinating! What a great bit of knowledge in the market.
Yeah, so
That's
here's what I
so
want to draw your
cool.
attention to. We talked about how much they tend to churn business, but look at this RRG. Look at their renewal rate and relationship duration.
Oh, fascinating! This one's phenomenal because they do a niche in the market. Oh, that's so cool.
47% of their book has been with them for 5 or more years. Now, they only have 180 policies, but these guys know what they want.
Yeah.
And if you
No,
get
no,
in
no.
here, they seem to
40,
hold on to that
41%.
business really well. I'm sorry, yeah, 41%.
Yeah,
But
that's
they hold on to their
phenomenal.
business really well. So I wanted to make sure to just set out a contrast of risk retention groups don't all just fit in a single category.
Right.
They
Yeah.
certainly can have a place and could be tremendous value in the right setting.
Yeah, absolutely. That's so interesting. And actually, I'm glad you point that out because look, I'm I'm jumping into a couple of these things here. I get too excited. I'll hold back. But it's great to point that out because one of the things I have to constantly remind myself is it's easy to, draw conclusions of this is bad or this is good. But that's such a poor way to look at any particular book of business. It's not that something is necessarily bad or good. It just is. And there are use cases and there are reasons behind all these things. And isn't that the beauty of, the capitalist uh, society in which we live is that you can find solutions for all of these niche cases that are so phenomenal and actually serves the people purchasing the insurance well. I just love that. It's so interesting.
Yeah. And so important to keep that open mind where you're evaluating it through your lens, which is how do I want to understand this?
Right.
Is the opportunity I might have business I want to place in one of these? Is the opportunity I can prospect in a really powerful way out of these? Is it just understanding how they exist in the market so that I'm educated and I know how to talk about them in a good way? Or I know how to give my customers the pros and cons and why we're using them or not using them. So very interesting. The other interesting piece I just want to mention about these from the somewhat limited exposure that I do have to them, but in some research here getting ready for this, it does seem like many of these struggle with distribution. And when I say struggle, I just mean they have limited distribution.
Yeah. Yeah.
So if you are looking for, you find one of these that is interesting for a prospect or a customer that you have, it is likely that they are looking for distribution and looking for submissions in business. They may or may not be that hard to get connected to. So you can always try just looking them up, reaching out to them directly, or finding out what MGAs they're distributing through and see if you can get access to their markets.
That's
But
cool.
many of these that we've looked at before are aggressively taking business and seem to, if you hit their niche and their timing right, are taking a business really aggressively. So very interesting to just think about as far as submission for new business there, especially if you're having trouble finding a market that's interested in a certain motor carrier.
Yeah, that's cool. And I'll put it out there. If anyone knows somebody at American Forest Casualty Company Risk Retention Group, send them our way. I'd love to ask them some questions. That'd be super fun.
Yeah, great. All right. Well, I think that's enough on risk retention groups for today. Looking forward to digging into MOTUS and many other interesting topics in the days ahead. But for now, I'm going to sign off.
Yeah. Thanks for joining us, everybody. Have a fantastic rest of your day.
We'll see you next time.